Hey, everybody, it's Mark Yagi. Hope you're doing well. This is your stock market update for the week. What is today? The 11th of August. Holy moly, this year is flying by. All right, we are in a red market. That means, like if you're not in cash, you should just be pretty hedged or pretty protected. And so let's take a look. I just got off my mastermind call and I will show you what we talked about. And I'll show you what I mean by the market being red. If I can find that screen, I know I can find it. Okay, here we go. All right, so the market is red. You can see we have 3 red lights and 1 green light, and it's kind of waffling. It may want to go yellow by the end of the day, but I think it's red. So that means you don't need to be initiating any new positions or doing anything crazy like that. You got to wait for the market to be in your favor, because remember, 70% of a stock's performance comes from the direction of a market. It's a market of stocks, a stock market. And so there are individual stocks that make up that market. You've got to know that statistic. So you want the trend to be your friend. You want the market to be green and be in your back rather than as a headwind. All right. So the NASDAQ, look at the weekly. The weekly looks really strong. It just had to have a correction here back to the 10-week moving average. This is the daily, and you can see it correcting down to that 50-day moving average. It's kind of a healthy correction at this point. I don't see any high volume sell-offs. I don't see a lot of things to be alarmed with. I think it's probably just a technical bounce off the 50-day, but we'll see. If it's strong and it gaps down, it does some big volume stuff, then I might have a different tune on that. Okay, let's see here. We've got the S&P 500 is bouncing off the 50-day moving average, just a nice quick little bounce. That's healthy because it's still above it. Same thing with the Dow. That's actually above the 10-day moving average. That's healthy. And then the New York Stock Exchange Composite is also fairly healthy. So the one that's kind of selling off a bit more is the NASDAQ, and the other broader markets seem to be holding up. I want to point out this 2 days ago, yesterday, I guess we got a big bad print on the volatility index. So ignore that. But the volatility is now bounced back for the first time in a while, like to sustain a bounce above the 50-day moving average. So something to keep an eye on. It just means there's a little bit more fear in the market, but it's not that bad. It's certainly not the spike that we got back from 18 to 30 back in March. So we've got a little spike going on, but a little mini spike, I would say. I want to point out this crazy treasury market. And I was just telling my mastermind people, look, we've been in a 40-year bull market in treasuries, and that is over. I think the treasury market is now a gigantic Ponzi scheme. I think the world is moving to a different reserve currency. I think there's a lot of reasons that people are selling off treasuries around the world, and you're seeing it in the chart. And so I have this pattern called the dreaded H pattern. And I don't know if you could see it, but there's a red H here, and it goes up and it makes that little upside down U. And when it goes down to the other side of the upside down U, it drops. And notice it gap down with some energy. And now it's making another green H pattern, little dreaded H pattern. And now the stock is, or now the stock, it's the TLT ETF, which is the 20-year treasuries. It's now at 95. Well, I don't think it's going to hold it. I think there's a lot of energy on the way down. So I see that I drew a green line there. That 91.85 is in play. Well, let's analyze that. That's about 6% down from where it is now. 6% down on an instrument that's supposed to be the safe instrument, paying you 4% a year or whatever, 4.5% or whatever they're paying. It's not much. Certainly doesn't beat inflation. Like, what kind of an investment is that? If you're in bonds, and a lot of pensions are in bonds, a lot, because they're supposed to be the safe money, and they have been for, 39 of the last 40 years, those things are in trouble. You see banks failing because they're holding treasuries on their books. You see pensions, you're going to see pensions failing. They're keeping it very quiet, but these pensions are indexed to the funds, and the funds are all declining by huge amounts of money. Sorry, the treasury funds are declining by that. There's a lot of trouble here. And I suspect, I gave you a little warning last week, but I suspect you're going to see systemic problems coming from the action in the treasury market, because that's where the big money is. That's the biggest market in the world. All right, let's talk a little bit of, let's skip over here. Let's talk a little bit of Tesla. Tesla's since its numbers. It gapped down on energy and then it came back down and it's testing its 50-day moving average. I don't think it's going to go test the 200, but what do I know? I'm just a guy. But I think it's certainly wanting to test. It's not testing out on high volume, so it makes me feel that this little sell-off is not really that powerful and that real. Apple, same thing. We gapped down last week after earnings, gapped down below the 50-day moving average. That one's got a little bit more strength behind it. This one could go down and test the 160 level, that that 200-day moving average. I don't think so. Now, I'm just maybe being an optimist here, but I think that sell-off just said, hey, look, there was a bunch of people that made a lot of profit on the way up from 124 to 198, and now they're just taking some money off the table, and the stock should shore up here and consolidate here around the 170, 180 level and go right back up. That's what I see. All that bets are off if the market starts to sell off bigger, but right now that all looks fairly safe to me. All right, listen, enough on that. I hope you have a fantastic weekend. Always hope you're enjoying these things. I enjoy making them for you. So keep watching and maybe giving some comments wherever you see it. And I'll see you next week on the weekly stock market update. Have a great weekend, everybody. Take care. Bye.